Welcome back guys, my name is Angelo. While summer months are usually relatively boring when it comes to financial markets, this one has been pretty eventful so far. We have both good and bad news to talk about this time. The good news is the stock market continued its rally through July. The bad news is one of the big three rating agencies, Fitch, just downgraded the US credit rating. The last time this happened, things didn't look too pretty in the markets the following weeks. So yeah, let's have a closer look and see if there's anything we should do as ETF investors. Apart from that, we'll of course also discuss any other important events in my two other investments, P2P Lending and crypto, up to today, August 4th, 2023. Let's jump right into it and begin with the largest chunk of our investments, stocks in the form of low-cost broad ETFs. Here's where our ETF portfolio stands as of today, August 4th, 2023. By the way, the free tool GetQueen link down below, which I'm using here, also shows you which sectors you're currently invested in via the stocks within your ETFs. We currently have 28% in information technology, 15% financials, 12% healthcare, 11% consumer discretionary, 11% industrials, 6.5% consumer staples, 5% energy, 4% materials, 3% utilities, 2% other, and 2% communication services. In July, our main ETF, the accumulating Vanguard FTSE World, was up 2.18% for a much better than expected performance of 14.07% since the start of the year. Okay, but now let's get to what happened just 3 days ago, which I teased at the start of the video. Just don't forget to hit the like button to let me know that you want me to keep doing these monthly update videos and to subscribe if you haven't yet. Also, none of this is investment advice, I'm just sharing my personal opinion with all of you. Alright, on August 1st, the United States debt rating was downgraded by Fitch from the top rating AAA to the second best AA+. This means that there are now only 9 countries left in the world with the best credit rating score: Australia, Denmark, Germany, Luxembourg, the Netherlands, Norway, Singapore, Sweden, and Switzerland. A major reason for the downgrade is that the US debt keeps increasing and actually ballooned over the past few years since COVID to a total of $31.5 trillion in Q1 2023. Now, unless you're living in the US, your primary concern is probably how this could affect your investments in the stock market, for which most of you, me included, use passive low-cost ETFs. After all, US stocks currently make up 60% of my favorite ETF, the Vanguard FTSE World, on a market cap basis. Well, as it turns out, this wasn't the first time the US got downgraded. Standard & Poor's did the same exactly 12 years ago. Last time, the global stock market dropped by 13% within only 3 weeks of the rating downgrade. I'm using the SPDR MSCI All Country World Index ETF for this example, by the way, since it was around back then and it's very close to the FTSE World in what it covers. Keep in mind that last time the Greek debt crisis reached its peak around that same time, which negatively impacted European stock markets as well. Well, a 13% drop within such a short amount of time definitely looks scary. But now let's have a look at how the market performed over the next 12 months. As it turns out, the market fully recovered within 5 months and was actually up 13.28% just 1 year after the rating downgrade. Interesting. And 12 years later, what was once a scary event just looks like another small blip on the market's long-term upwards trajectory. By the way, you might be interested to know that Standard & Poor's hasn't actually changed its US debt rating since 2011. Fitch simply joined them with the same rating now, 12 years later. Based on how limited the market's reaction has been so far compared to how quickly it dropped 12 years ago, I do think investors are less worried this time around. Could we see another small correction? Of course, that's always possible. I mean, the stock market has gone up a ton since the start of the year, and corrections or even crashes are part of the journey. In my opinion, that would be another buying opportunity though, and if you're a long-term investor like my wife and I, then what happens in the short term shouldn't really matter anyway. Our strategy once again remains the same. We simply buy a single ETF, the accumulating Vanguard FTSE World, every month, no matter what the latest news headline is trying to make everyone worry about. If you're new to ETFs and you're looking for the best low-cost brokers in Europe, you can find my links in the description below, which is a great way to support me if you'd like to. You can also find my ETF video playlist there, which should help you get started. Okay, let's move on to my investments in P2P Lending, starting with a monthly overview. I earned a total of 300 euros in interest in July, making this a good month overall. According to Portfolio Performance, the free tool I use to track my investments, that's a monthly return of 0.75% and an internal rate of return of 9.01% from P2P Lending this year. But let's look at some peer-to-peer platforms individually. Starting with my largest one, Mintos, which had a decent month with 65 euros in earnings. I'm happy to see that my overdue payments decreased by 105 euros and I'm hoping this trend will continue. The 11 Group, one of my favorite groups of lending companies on Mintos, acquired Express Credit in July to expand its lending activities in Africa. In my opinion, that's good for us investors investors, as this means new express credit loans now come with a group guarantee, making them a lot more attractive. Then we have Escatit, which ran smoothly as usual. A total of 27.7 million euros of loans were funded on the platform in July alone, the largest amount so far by a significant margin. It's pretty clear that Escatit is still very popular among European investors. Meanwhile, I had my best month ever on Via Invest with a total of 53.50 euros in interest payments. Next up is Income Marketplace, which also performed well in July. The availability of loans was a bit lower than usual, but I was still able to be fully invested most of the time, with my favorite lending company ITF Group adding new 15% interest loans on a regular basis. Then we have RoboCash, where I had my best month ever with 50.53 euros in earnings. The RoboCash Group, offering all the loans on RoboCash, published its results for the first half of 2023. In Q2, they managed to increase revenue by 20.5% to 40.6 million, and net profit rose by 67% compared to Q1 to $2.5 million. It's great to see that the group is doing so well financially, as that's important for the buyback obligation on its loans. July was my best month on Lande as well, with a total of 43.31 euros in earnings, coming from interest payments as well as a cashback campaign they had running for existing investors that signed up more than 6 months ago. Since I was planning on increasing my account size anyway, I invested an additional 500 euros on July 17th. That's it for my investments in P2P Lending. You can find links to my favorite platforms down below in the description if you'd like to check any of them out and support me. Last but not least, let's see how the highly speculative small portion of my portfolio I have in the two largest crypto assets, Bitcoin and Ethereum, performed. After a strong June, Bitcoin was down 4.8% in July for a year-to-date performance of plus 75%, while Ethereum was down 4.7% in July and is now sitting at plus 52.8% since the start of the year. And that's pretty much everything that happened regarding my investments in July. In case you're wondering how close my wife and I are currently to financial independence and early retirement in Austria, and what we learned throughout our 7-year journey so far, make sure you check out this recent video of mine if you haven't seen it yet. I honestly think it's one of my best ones so far, but let me know what you think about it. Thank you guys so much for watching, have a wonderful day, and until next time.